Good morning, it's Ken at Tortoise Capital with a review of the weekend trading report for February 1st, 2020. Go Chiefs. Bullish normal conditions. Looking at the ADX look back periods, we have a big collapse on the 3 and the 10-day breakdowns. Deeply oversold on the 30-day breakdown as well. It was pulled the 90-day look back into the high end of neutral, while only the 270 remains overbought. So the bull market's still in play, but it took a significant hit, has come back to a very important critical state for us to look at on the different dimensions of market classification. Price with respect to the 200 is white bullish at 6.89% above the 200-day moving average. ADX is still a strong bull. Risk Z has pulled back to 0.882, which is a Z-score of minus 1.27. You can see the 180-day time series on this one. In the background, you can hear that the dogs definitely agree with that. The ETF2 theoretical exposure has dropped to 50% on this sell-off. Monthly health check. The month started well, but has collapsed. 1 month low support, the 4 moving average support, north skin of the dragon, midpoint, south side of the dragon, Bollinger Band, PSAR flip, belly of the dragon, Z1, 2, and then long-term fair value. We are still in the summer, so this pullback is about a 3% pullback. This would be a natural place to find support. Anything north of the 4 period would be suitable for re-engaging on the long side. I really think that's kind of the turning point, about 310. That would be a 7% sell-off. Weekly. Previous week, great. This week, voted down. So the breakouts above this would be above the 4, above the hump of the 10, and at Z plus 2. So this is still really an extraordinary move. Anything that holds north of this PSAR flip is a buy on dip opportunity, I would say, on the daily charts. So breakouts above daily highs, you should still default to long side intraday. So keep that in mind when you're framing our swing trading one day at a time. Support levels, weekly low, belly of the dragon, PSAR flip, RL90, long-term fair value, and Bollinger Band mean are the same there. This one I'm treating as this crossover of the 90 over the 270. It's sort of a natural point. Z1, and then belly of the dragon here, and then Z2. We're still deeply into the summer, so that's why these are buy on dip opportunities. So these are all buying locations. The bull is weakened but has not fallen. Market health check. So this is the daily. Here's the 5-day range in the black box. Friday's big directional move with the low, and now within spitting distance of fair value and Z minus 1. So that pullback from 333 to 321 is about $12 on 330, so that's just about a 3% move. RLXD has occurred here in that 4-period moving average of the 10, also RLXD'd. You should take a look at the flashcard we posted on the bar-by-bar trading in DIA this week on Patreon. That has a very good discussion of how to play these kinds of moves and interpret on daily bars. That helped us into the big short side intraday trades yesterday to take advantage of this weakness, and you should study that one. We have come through the Red River and are in the fall. Support levels down here now at fair value and Z1, Z2, 30-day low here, and the Z2. So definitely short-term negative momentum. Blended monthly rebalancing portfolio quick looks. Strong, remains strong this week. The healthcare give back is the anomaly. In a week when the lagging discretionary did better than healthcare, it's pause. Is this a value play here, or did that break? I think it's a value play. And then weakness in weakness here. Weakness begets weakness. Half of them are on cash signals now. Treasuries are starting to resume in the defensive plays. But again, strength begets strength, so that's the default position, is look for opportunities in these areas. If we get market finding support at this natural level, then that's where you're looking for leadership. Apple, Microsoft, Intel, sounds like tech to me. McDonald's, Disney, and IBM sounds like mainstream America to me. Big break in 3M is showing some opportunities. Danny posted a really beautiful 3R intraday win on a video, which I posted on Patreon for you to review, that uses that TC2000 package to perfectly frame and manage the trades. Man, he is really finding his stride, so well done, Danny. Great job on the package, great job on your trading. Sector spiders, strong, remains strong. There's that weakness in healthcare and a first crack in technology and semis. Insurance and consumer discretionary, maybe the defensive plays that are some sector rotation, but remained weak in the whole energy complex and basic materials as the world market slows down. Again, strength begets strength, and weakness was weak. U.S. continues to lead the way, although we're starting to see some weakness creeping in here. Technology and utilities, interestingly enough. So the growth and then the defensive plays starting to emerge. Latin America back to suffering. The rising stars, that's green and white, so Russia. S&P growth. Weakness, and I should say utilities, that's that defensive play starting to emerge. Otherwise, the strong remain the strong. Volatility and liquidity for intraday trading targets. Shifting to the daily, I've seen these. Lots of overreaction and channelings. So that's what you do in a bull market that is very strong, that has had a sharp pullback. That these are high reliability entry systems. So like a second mouse, what I'm going to do is not just buy them, but buy them with respect and care, meaning that I'm looking for intraday positions to build and then leave a piece for swing trading. That's combining the best of turbo and swing, turbo and core. This is at a natural place for volatility to have run its course and find support, and that's the reason why you get these kinds of entries. Some max pain candidates that may be oversold for intraday recoveries. Some really quality names in there that people got to buy, and that's why they want to buy them on sale in a bull market. Now that we're through the first hurdle of impeachment, and have a promise of a Mideast peace plan. So big collapses on this sharp sell-off. A 3% sell-off in the market has produced these kinds of oversold conditions and breakdowns in the look-back periods. That's how strong the market's been. Lots of channeling and overreactions, plenty of auto framers, so you can be very selective and not in a hurry. Be quick, but don't hurry. ETFs, almost everything on auto framers. Lots of RSI2 breakdowns, and as you would expect. Here's where the winners are, and the breakouts to the upside in the defensive plays. Daily pinch and stretch. Most everything is becoming directional now, so the number of super pinches on daily charts is reducing. XLY and XLF are definitely ones I'm going to look at. And United Technology and Cisco in the tech sector, maybe it's time for them to rotate into leadership. Lots in the auto framer, as you would expect. Plenty to choose from in the RLFF. And daily squeezes, not too many because of the decisive move on Friday. So Boeing, therefore, is one. That's sort of the bellwether for the Dow, which is the bellwether for return to bull. So I'm going to go be framing Boeing with care. And then Johnson & Johnson and Disney and Schlumberger. Nice. See the seasonals. I like looking at the spring. Nothing in the spring. Lots that are deep in the winter. These are the ones that have been crushed the most. And then the summertime, you see the defensive plays. Walmart, Steel, Verizon, and then Coke, IBM, and Intel. That's going to be your relative strength guys. So Intel, amazing. Then just a quick look there at the daily seasons of MACD, then the 2 weeklies that I care about, spring and summer, and then the monthly spring. Big breakdowns, as you can see, across the board in both populations. IBM with a stretch to the upside here. Nice. Let's go look at that one. The big collapse and a breakdown through the straight line, regression line on the polynomial starting to roll over, accelerating to the downside, back to the long-term normal of slope. So this isn't a moment of panic. So it's precisely balanced on a knife edge between opportunity and risk. It has come back to that long-term normal. The froth is blown off. This is a natural place for it to find support. That's why you see all those signals for overreaction and channeling, perfectly poised on a knife edge, and enough volatility now that there will be some weak hands in both directions. So good trading coming up. Just look how manic depressive this market has been lately. The relatively tight cluster, and then just wow. Whew. The Trump sell-offs and euphoria, and the sell-offs and the euphoria. Big collapse on the slope of the 10. The 30 has come back into the normal middle, and the 90 is peaking, as we've been talking about natural places for this to come back, and came right back to the bottom of the river. Hear us talk about that last week. So there's our guide. Right on the boundary. Last time, bang, one leg, 2 legs. Not saying it'll happen again, but that's the last time that it did that. And here, made gains. Here, made gains. Here, what's it going to do? This was a little deeper because the second leg down took it to the bottom of the river. This last time, the pullback only hit the edge of the river and resumed. So that's why this was a large pullback, a small pullback, a medium pullback. So small, medium. The next one would be a leg down to here to about 310, 305 if this doesn't hold. That's the downside move. It's everything I want to cover from the reports. Just flash through these for your reference. Defense. Look at this, Microsoft. Man. Stealth candidate. Getting it done. We will see you in the chat room and on Patreon.